Welcome, welcome, welcome. Good afternoon, everybody. It's your boy Stevenson Lindor, and I'm here to do a quick updated video. I haven't done a video on bounce back in a while. So a lot of people have been asking, what's the strategy? How do I use it? So I just wanted to cut this quick video, show you guys how to properly utilize the bounce back strategy. Now, a lot has changed since the last time I've done and recorded video on this. We not only have the EA side, but we also have the sniper side, which is conducted by Trade House, particularly Zach and Jordan. So you have the EA side that automatically calls out trade opportunities, right? Strategy. I'm going to show you guys how to use that. And then you have the sniper side. The sniper side, like I said, done by Trade House. Shout out to Zach and Jordan, Mike Miles, the whole crew, where they basically show you pretty much how they execute their trades, precision entries, as you can see from right here. Definitely check it out, guys. Go to your back office if you don't already have it. Upgrade to bounce back, and you can catch these guys Tuesday, Wednesdays, and Thursdays, 9 a.m. Eastern Standard Time on Go Live TV, telling you all of the hottest trade opportunities out in the market. So back to the EA side. Right? This is for basically people who want to trade on their own, right? But they need a little guidance, kind of like the harmonic scanner, right? You have the harmonic scanner where it does all the work for you, but you still want to, add your strategy, in conjunction with the software, right? So in theory, as always, you can take the trades as they come, like oil, for example. It's telling you to look for a buy. Green is for buy, red bars is for sell. And you can just jump in the market. But I always advise against that. You want to basically use other confirmation before jumping in. So as always, pretty much the same. Only difference is we're going to use one more confirmation to confirm if the trade is going to go your way. So 9 out of 10 times when bounce back calls a trade opportunity, 9 out of 10 times the trade is pretty much going the opposite way. So you see how they're looking for a U.S. oil for a buy, right? Currently, right now, oil is in a downtrend, right? So what I like to do is I like to identify this trend, right? So starting from the top, bringing it all the way across, boom, just to identify a trend. Now, you don't have to draw a trend line, right? But we do this especially for newbies, right? New people, right? To give them a better understanding so they know what side of the trend they're on. So currently, we're in a downtrend here, right? Now, there's two ways that you can basically enter this trade, right? One is waiting for a breakout. Basically, I'm waiting for price to break out. So I know it's broken this downward trend. Wait for a retest, right? Pull back, but it has to stay above, right? Has to stay above this trend line here, and then look for my buy. And another is wait for a price to come to a particular zone and then watch it go up, right? So right around here is a zone. I'm going to circle it. See right there? See where that bullish engulfing candlestick is? Right? That means this would be a very good area for a buy. I'm going to mark this up right around here. Right? So if price drops down, this is where I would want to look for my buy opportunity. Right? I will look for it to drop around here, right inside the zone. And why here? Because you see the strong movement to the upside, right? When this engulfing candlestick formed, you had your nice movement to the upside. So I'm looking for something similar. Price was to drop here, get respected, and then I'm looking for that move to go up. All right? So two ways. All right? So anytime you see a trade opportunity, you want to identify the trend. And then number two, you want to find your nearest engulfing candlestick zone, right? Where you see strong momentum of price going in that direction. So since we're looking for a buy, I got a nice bullish engulfing candlestick here. This is where I would want to look for my buy. And then as far as my stop loss is going to be placed right below it. So right around here. Right? Pretty simple, pretty easy, right? Stop loss always below your entry. I'm entering here for my buy, right? If I'm looking for my buy here in this zone, my stop loss is going to be right below there, right? Some people want to place it below the wick. You can do that, but considering oil right now, I don't see price going back there. Then again, it could. You know, these are some crazy, crazy times right now. But I always like to put my stop loss right below my entry, right? And then I'm looking for a nice bounce and looking for this to go to the upside. So that's one way. The second way, again, is I'm waiting for price to break out. So what I'm usually looking for is a strong bullish impulse. So something like this, right? Kind of like, see this impulse right here? That in reverse. I'm looking for a strong breakout, right? Because one thing about strong movements in either direction, you will always get a pullback, always, right? Always get a pullback. And you can use the MACD right here, this indicator, right? It stands for moving average, convergence, divergence. And what I'm looking for is, I'm looking for a break, right? Look for my MACD to break above here, this zero line, retest, and then continue going up. The reason why I'm looking for that is for a couple reasons. Number one, first of all, the MACD is a momentum indicator. So basically, when momentum is going up, you're looking for a buy. When it's coming down, you're looking for a sell. That zero line in the middle, right, it basically acts of letting you know that momentum has shifted from a downtrend to an uptrend, from an uptrend to a downtrend, right? But the thing is, in order to confirm if it's in that trend, what you need is a retest. So for example, like this right here, perfect example. You see how this crossed down, crossed, right? So now we went from an uptrend, see this little uptrend right here, to now back to a downtrend. But what confirmed this downtrend as opposed to this uptrend, you see how when it crossed here, it came right back down? The problem is we didn't get no retest on this crossover to the upside. So when it crossed here, see how when it pulled back, right, kind of gave you a nice flag right here. It retested zero line and it never crossed back over to the upside. So that's what I mean. You want to wait for a retest. Let it pull back. And once you see price isn't going beyond the previous high right here. So if I'm looking for a sell, right, this is the crossover. This is the first time we're crossing over. So let's circle this, right? First time it's crossing over from an uptrend to a downtrend. See how when it came over here, came back to that zero line? Notice here is no longer higher than here. This is what you call in trading a lower high, right? So this is a lower low, lower high, but this lower high did not exceed this. So once I see that, now I can comfortably take my trade. And I always usually say, you want to target anywhere from 10 to 30 pips. You can target more. You can actually use this to scalp, swing trade, intraday. You know, it's mostly used for intraday and scalping. This tool was designed for intraday and scalping. All right. So I always target about 10, 30 pips. You can do definitely up to 50 pips. Bounce back is definitely, the software side is definitely good for that. Right. So I basically need the same scenario to happen over here. Right. But in reverse. All right. So let's drag this over here. And there we go. All right. So what I'm waiting for is I need this to break out, and then I need a retest. Right? Once this pulls back, then I can look for this to go to the upside. Actually, look at this. All right, so I got a breakout, and then I need this to retest, pull back before continuing up. So that's why I need the break above, signaling we are now going in an uptrend, right? Because right now we are in a downtrend, signaling up, and then I need it to stay above this line. Once it does, then I can look for my buy. So when it's doing that pullback, right, this is where I want to enter. Entry here, right? Like I said, I would always place stop loss below and then look for your move to the upside. All right, and that's how you properly use the bounce back strategy. So we'll go over a couple of them so you get the idea, and now you know, like literally these are the steps. So I'll actually write it out here. So steps for EV, right? Number one, identify trend, right? You just want to identify the trend. It makes life easy for a lot of traders. So you know what side of the market you're on. Two, right? You want to wait for a breakout. Wait for a breakout. So wait for a strong breakout. Number three, right? Wait for a retest, right? Basically pull back, retest, pull back. Also on the MACD as well, right? Wait for a breakout right here, breakout, break of trend, and then wait for a retest, pullback. You should also be getting a retest pullback on your MACD. And then number four, right? Once retest is confirmed, enter a stop loss above or below entry. That's it. Your target is number five, target always 10 to 30 pips. Boom, those are the rules, right? So I identified the trend, right? Wait for a strong breakout. So I'm waiting for a strong breakout. This is the actual strategy. I'm waiting for a strong breakout. So when that strong breakout is happening, I should get a strong break on my MACD. So momentum should start shifting to that side. I want to wait for a retest. I want to wait for this to pull back. Let it pull back. Should get some type of flag pulling back. Once it pulls back and I know that the trend is not reversing to go back down, right? Then I'm looking for my entry, place my stop loss below my entry, and then my target is about 10 to 30 pips, right? So look at another scenario. So this Euro Swiss franc, looking for a sell on the 1 hour. What I would do, since I got an aggressive move to the upside, probably drop down one. Loading here. All right. Drop down one. So here we go. Right. Whenever you're identifying a trend, always start from the high or low point. So on that US oil, right, because we're in a downtrend, I'm starting from the peak, a high point, right? Let's start here and bring this all the way across. Right. Boom. Right. A valid trend line is one that is confirmed by two or more touches. Right. So we are in a downtrend. Boom. Right. So again, I want to see a break of this, retest, then buy. Right. And then if I'm looking for an uptrend, I want to start from the low point and then gradually bring it across. Right. So now, in order to get the sell, what I need here, I need a same thing, break and a retest. So it'll look something like this. Break, boom, there we go. Right. I need a strong breakout, right? So I would get that. When that breakout is happening, understand something. Your indicator, your MACD, is not going to cross over unless price makes that move. So remember, your indicator follows price. So this is price. So once I get this strong break, I should get a strong cross down. Once I get that cross down, now what I'm waiting for is a retest of that zero line, right? So once I get that break, I should get a pullback. Remember, this pullback should not exceed this high, right? Once the pullback is confirmed and I realize this is not exceeding this previous high, then I can comfortably take my sell. Right? So again, to give you an idea, right? So you see here, perfect example. See how this crossed down, strong move down, strong impulse, aggressive breakdown, right? Notice when this pulled back to the 0 line, this pulled back here. This did not break this high. So once I see that it's not breaking, then I see, you know, wick exhaustion, all that other good stuff. Then I could comfortably sell. Okay? So that's what I want over here, right? Strong breakout. Breakout, right? You should see a strong bearish candlestick just break out, break this upward trend. After that, wait for pullback, right? So here it'll be wait for a retest. Once that is there, and I see that price is not about to break beyond here, because when price is pulling back, it can come back and retest this high. So if you see it moving aggressively, it shouldn't. Like one thing price shouldn't do is when it breaks down, it shouldn't reverse all the way back up. This is why we wait for a positive retest first. So usually on my advanced sessions, I always talk about like waiting for a flag. That flag is going to confirm. Like you see how this gave you a nice strong impulse, and then it gave you a flag, which led to this continuation, right? I need that over here. And once I get that, then I can sell, right? So it's a simple, easy strategy, right? If you notice, right before it started to drop and reverse, if you look left, and this is what I was talking about, waiting for it to get to like an engulfing candlestick. If you look left, you'll usually find an engulfing candlestick zone. So see that right here? Ta-da. If I mark that up, nice engulfing candlestick zone right around there. Perfect. And see how price came? Tapped, dropped. Right? Just missed it, but that's another way to like get your entries, right? If you look left to where current price is and you see an engulfing candlestick zone, you can look for your entry there. All you would do is place your stop loss outside of the zone. But the safer way is wait for price to reverse, wait for the break, retest, and then sell. All right? Really simple, easy strategy. Like I said, your target is always 10 to 30 pips. This is used for scalping. This is used for intraday. That's what the software was designed. It was created by Christopher Terry. This is his strategy. This is how he, you know, one of his strategies he uses to trade on a day-to-day basis, right? So really simple, really easy, available for not only beginners, intermediate, advanced. Great way to make profits. And again, with this one, unlike the harmonic scanner, you decide how much profits you want to take. You can get in there for 15 pips, 20. If you know it's going to go for 100, you can write it out for 100, right? The whole point of the software is to use it as a guide. So again, rules are identify a trend, wait for a strong break of that trend. You want price breaking that trend because this right now is going in an uptrend. Bounce back's calling for a sell. So you want it to come down aggressively and wait for a pullback. Once it pulls back and you see, right, once it comes back to that 0 line, pulls back here for price, wait for a retest on your MACD. Because your MACD, what's going to happen is going to come to momentum. By the time momentum comes back to that 0 line, you'll know, you'll see like, oh, price is not trying to break that high or price is not trying to break that low, right? Enter your trade, place your stop loss right above your entry. So I always recommend about maybe 10, 20, not even 10, I say 20, 30 pips, right? And then look for your trade to go accordingly, right? And like I said, target 10, 30, that's what we recommend. You can always go for more, all right? So just a quick update on this strategy, real simple, real easy. Hopefully this has been helpful. You can definitely catch me on Go Live on Monday nights at 7:30 Eastern Standard Time every week. All right, guys, take care, stay blessed. I'll see you next time.